Hey Blockies, it's Kosi here, and let me tell you, it's been quite the week for Bitcoiners. So with Bitcoin smashing through the 60k USD mark, get ready because this is just the beginning. So hold on to your hats, guys. Today we have a very special guest in our studio. Joining us is none other than Jeeva, who is the founding partner of Helix Collective based in Sydney, here to drop some alpha on crypto and DeFi. Enjoy.
Hey, welcome to Web3 Weekly with your host, Blockstar Technology.
Let's go. Hey guys, Charlie here with our 66th episode of Web3 Weekly. We have got the man, the myth, the legend, Jeeva from Helix Collective. How you going, man?
Good, mate. Good to be on.
Yeah. What we'll do, Jeeva, is if you could just give an introduction and a bit of background context for anyone that's listening and doesn't know who you are, mate.
Yeah, sure thing. So I started my career as a quant strat back in the day at Macquarie Bank, which is basically someone who can code and knows enough math and finance to be a bit dangerous, which is good fun. And I did that for a few years in London, which was an adventure. Great. I was young and out and about, and then I decided 4 years was enough. I quit, and then I started Helix, which is a venture studio. What we do is we take on 4 or 5 bets a year, normally pretty early stage. Dive in pretty deep to essentially get them through that early valley of death that startups are in, and help in any way we can. I guess by rights we're a product and engineering firm, but in practice we end up doing everything. We'll roll up our sleeves and do a bit of fundraising, get into sales, just be as useful as we possibly can to hack them out of that early stage. Our model is we sort of take some part cash and some part equity, and if we do our job well, then we create a new thriving business. And more recently, we've been doing a lot in the blockchain and DeFi space.
Yep. So when you started Helix, was that targeted at blockchain DeFi, or was that sort of general?
Yeah, it was a decade ago. So there was no such thing as DeFi, and I think Bitcoin was still pretty nascent, and I was too mid curve to buy any back then. But I'd sort of put the Helix strategy as we see a window of opportunity and we jump through it, and we trust that we'll be able to build a parachute before we go splat on the ground. So in the early days it was basically consumer tech, so it was basically B2C, and then we moved on to more SaaS businesses, and then we did a bunch of things that were more embedded hardware, and then things that were more in the big data, sort of taking big data and doing interesting things with it, deep tech would be probably the right word for it. And then we did a bunch of fintech, which sort of dovetailed nicely into DeFi, and now it's basically things on chain and things that are, and then of course the everything that's happening with LLMs. We think there's some cool businesses to be made and opportunities to be sort of pushed out there. So that's our current focus.
Yeah. The DeFi and AI space, it's hard to keep up between those two, mate. There is a lot happening.
It is. You can basically consume content all day and all night and not do any work very easily.
Yeah. How did you get into your crypto journey? Like, as you're saying, like you heard about Bitcoin in the early days, but sort of didn't jump in. And
I'd
how
say,
did that transition happen, man?
Yeah, I'd say when the ETH ICO mania was happening, I kind of saw this thing and I was like, I don't know if this is good or bad or interesting or not, but I should buy a small bag. So I bought a small bag, and I'd say that was basically me being a crypto tourist. It was like not really deep in the space. I wasn't taking self-custody seriously. It was just sort of like I had a small bag and didn't really care if it went up or went down. I just wanted to make sure I didn't miss something big if it did go gangbusters. And then I kind of like more or less forgot about it. Like ICOs, came and went, and I was off doing other things, and then DeFi summer hit, and I remember sitting on my balcony, having a beer, reading the Uniswap paper, understanding how Aave worked, and to me, honestly, it just clicked. I was just like, "Holy crap! This is something. This is not just mindless speculation on new equity tokens. It's not just like shit coining, right? Or meme stocking or whatever you want to call it, right? Like as in a low cap, stock trading. Like as in it's not just that. It's that, but it's that and more, right? It is, and I still stand by this. I'd say that DeFi is orders of magnitude better and cheaper than the traditional finance system. But we're still nascent and early, and it's janky as all fuck. Apologies for the language, but that's basically what that was my journey in. And I think once DeFi summer hit, I just started getting involved in protocols, started building stuff, and the rest is history, as they'd say. And there's a bit of, I guess, fortunate leverage when you're the founder of a venture studio and you want to build in a space. You get to point a bunch of devs at what you want to do, which meant we could build some cool stuff in this space.
Yeah, I remember that because like for a few years there, from like that 2017, 18, the pullback, it was like everyone was like decentralized exchanges, which no one really knew what it was back then. And I don't even think there was the word of like DeFi. It was like, yeah, we're going to be able to trade through smart contracts, and there was all these trade-offs of like how would it work, and all these ideas floating around. And then Uniswap was that big breaking point where you started actually getting token listings. It was working well, and then it took off when they done the airdrop as well and rewarded everyone. And then it was like the floodgates had fully opened, and everybody was jumping in. And I think it also helped with like the NFT space at that same time, with the NFTs sort of starting to grow, because a lot of people started self-custodying. Like if you wanted to go to OpenSea and buy a monkey JPEG or whatever you wanted to do, you had to get your MetaMask wallet. And before then, it was like no one really had MetaMask. Even like the crypto traders, they were just on exchanges. And it sort of made like a turning point of people learning how to do MetaMask and storing seed phrases. And I guess like a lot of people probably don't have those seed phrases anymore, the old trial and error.
And I think this is the journey of any new tech, right? Like, as in, there was a time when self-custody was a royal pain in the ass, and now it's like hard, but and I'd say it's not even really hard. It's just different, right? And it's something you got to learn. Like the barrier at the moment to self-custody is really one of spending some time skilling up, and I'd almost play this as like the journey of the internet, is because I remember when the internet came out, I was pretty lucky. My dad worked in tech. He was a software engineer as well, so we had the internet very early on, before other people did. It was still very, very ill understood. What email was, most people didn't get. It's but it was the like anything, it was the thing that like people learned, right? People learned, and then people onboarded, and it wasn't something that like usability necessarily fixed. It was something that you actually learned how to do, and you learned how to use a browser, be on the internet, and you got value from it. So you kept coming back, and then the flywheel was created. And I kind of see these like early days as crypto as the same thing. Is we're still in the like, yes, okay, we can make things like self-custody easier, and when you go straight to an app, just like have a wallet ready for the user to sort of like just jump in and start using, and then sort of take them on a journey to like pull them out into MetaMask or a hardware wallet or otherwise. But fundamentally you can't avoid having to learn some of this stuff, and it's for your own like long-term benefit. I'd say it's the simple things to learn, and then you've unlocked this whole new world. And we're still in the stage where not enough people know it, which is both good because there's lots of upside to be captured, but bad because we want the whole world to be doing what we do. And I can see that, like, the path between the number of crypto users we have now and like 10xing it is like, yep, it's better UX and better tools, but it's also just more education, more people talking about it, more people teaching people how to do it, more people sitting with their mates and helping them set up a self-custody wallet, like, as in, and this stuff happens, right? As in, it's the nature of it, like, as in it's slow at first, and then once it starts hitting that kink in the curve, it becomes exponential, and before we know it, everyone's on.
Yeah, it's funny that because I've had mates, after the recent bull run, and I've been telling them, like, hey, just get some, like, jump into it, you can do this. And then they come later and I'm like, oh, maybe just hold off a little bit, like it's pretty high, just wait. And then I give them a process of, like, just mates in the real world of, like, yeah, like, use this exchange, for instance, and then this. And then they go on this journey of themselves of researching and looking. And then they're messaging me and they're like, hey, Charlie, like, how do I get this stuff from the exchange to my wallet so I can go buy this or do this? And I'm like, oh, yeah, I've just sort of been, when you've been doing it that long, you're like, oh, yeah, you just do this and this. And they're like, what do you mean? But as soon as they get past that learning curve and they do their first transaction into MetaMask and then MetaMask, and now you've got bridging and everything, and they're away, and then they go teach another 5-10 people in their circles. So
I've just started telling people now, basically. I don't even because before I used to do the same thing. I used to be like, oh, go to this exchange and buy, because I was always trying to optimize for people to get the best execution price. And I was like, well, you get the best execution price on an exchange and this. But my go-to advice now is basically set up MetaMask, hit the buy button, swipe your credit card, do the light KYC checks, buy your first bit of crypto. It's already self-custody. There you go. Now you can go and, like, muck around in. It's the point of buying crypto is not to get crypto exposure. Is like, it is that, but it's also to unlock and be part of this whole new world that you haven't seen yet, right? It's to look behind the curtain and cross over to this side. So that's been my new advice for people who want to come in. Is like, no matter the price of crypto, it's like, well, whatever, you buy like 500 or a grand worth of ETH on your debit card. If the price goes up or down, 50%, you're not like, you're not wrecked. That's well within probably what, if you're buying it on your debit card, that's well within, like, your throwaway fund money. And but then you get the extra upside of being part of this world, which I think is more interesting and more important in the long run than just having some Bitcoin or ETH exposure.
And
I think like I'm going the other way. It's like, and then, like, when they want to, like, buy with size, I'm like, yeah, now go to an exchange. And by the way, here's a ledger for your birthday present, and it's
yeah. And I think that's like, there wasn't really much, like, it sort of just happened. But that transition of being able to buy crypto with a credit card through self-custody was a big game changer, without needing to actually go to an exchange now and having it all set in there. Of course, people get a bit worried when they're like, hey, why are they asking for my driver's license or my passport? And it's like, no, it's just like buying stocks. Don't worry about it,
Yeah, it's just like buying stocks. Don't worry about it. And, like, I think onboarding into crypto is a frontier where the smoother that gets, the better it's going to be. And then there's going to be lots of people who'll end up. I also think there's going to be a lot of people, and as you can see by whites in my beard, you can take a guess at my advanced age. But there's going to be people who, like my daughters, for instance, who there's a good chance that they'll grow up in a world where the first job that they get, they might be paid in crypto, right? They might earn crypto directly. So there's a good to fair chance that, and again, I draw the parallel to the internet. Companies like Canva and Atlassian, they had insane growth over a 10, 15-year period. Not so much as in the products were great, of course, and I'm not like bragging on the products, but also a lot of people were just, going from being, 13 to 14 or 18 to 19 or 23, as in they were just like growing a year older and in a position where they had to make decisions and do things. And they didn't grow up in a world where you did project management in sticky notes or in Microsoft Project. They grew up in a world where it was the internet. So it was a very obvious thing, right? To onboard, they didn't grow up in a world where you sent everyone, cardboard, as in you went to the shops and bought a party invitation. You created your own with Canva and you printed it out, or you didn't, you just sent it to everyone, on Facebook or Insta or whatever the communication tool of choice is. So you end up, and I think we're going to end up with something similar in crypto land, where there's just a bunch of people, a couple of generations younger than me, who are just going to grow up, and this is going to be native for them, as opposed to it being something they'll have to learn. They're not going to learn TradFi and have to work out how to onboard their AUD or USD. They're not going to have any AUD or USD. It's as in.
Yeah, well, I know the banks are making it hard for people in Australia to get into the crypto at the moment. I myself come across that a couple of months ago, and I ended up leaving the bank. I'm like, all right, well, I'm changing banks now. I'm not stuck with you. I gave him a call and went through this whole process and got told, no, we're not letting you buy any crypto. And I'm like, fine, I'm going to go set up with a bank that will accept it. So you just lost a customer. But on the technology, Jeeva, I'd like to know, because when I started, I sort of wasn't. I'd been on computers and technology when I was younger, in late 90s, early 2000s. We had computer and a bit of internet, and had played around. And then I'd sort of gone away, and I was going into my teenage years, and I was out a lot and making friends. And I moved to Australia at that time. Didn't go to school here, so I was just out meeting new people, making new friendships. And then I ended up bringing myself back into the technology, and that was around the time Bitcoin was sort of coming around to 2015. It was sort of all around the news 16. But the amount that the technology grows amazes me. Open source technology, decentralization, the innovation that we see every Bitcoin halvening over 4 years. It's not the same beast that it was 4 years ago, and it won't be another 4 years from now. How do you, with your background, see the nature of open source decentralization? It amazes me, the smart people out there, like Hayden Adams with Uniswap and his team.
Oh, look, I love it. I think this is it's amazing, and it's a testament to sort of both human innovations and free market sort of allowing innovation to come and fight it out, and may the best one win. And I do love this idea that there's certain things that is better set up as a immutable protocol as opposed to a business. And when you nail the rules of the game just right, it ends up with this beautiful positive flywheel where the sum is the more people that come, the better it is, and the more powerful it is. And this combination of I think blockchain and open source and Uniswap, and also decentralization is really nailing that ethos and nailing that setup. So I think it's fantastic.
Yeah.
I agree. It is hard to keep track of everything that's going on in this space, and I'd say that DeFi Summit it was possible to keep track of everything. Now I just got like, I have no chance. I'm just like, I don't know what's happening in most corners of the Web3 space. It's just not possible. There's just so much happening, and there's so much innovation, and there's so much people building, which I think it's a good thing. It's
Yeah.
It does become a bit like daunting for newbies or people new to the space to try and work out where they start, but it's but I think it's also part of the it's almost like part of the learning process. It's
The journey.
you sort of come in. It's I've kind of described it as like the best way to be new to crypto is to sort of like come in and find a buddy and go exploring. Like it's
Yeah. Go on an adventure with a friend.
yeah, pretty much. Yeah.
Yeah, no, I agree with you there, man. Even with like recently, like I've seen, like they have the ERC 404, which just bypassed the EIP implementation and went, hey, we just want to call it 404. That's pretty funny and cool. And then that's bringing NFTs with a bit of tokenization and DeFi element. And then I seen a new one because obviously it hasn't been tested and by the community and passed, and then there's a new bit of implementation like a week later that someone built from that idea and built on, and it's like, when's this going to stop? How many months will this 404 expand on until we come to the final version? But with that, man, what have you guys like? What DeFi mechanisms, not projects as such, but like software, have you guys been working on at Helix? Like, what's some of those cool things in the DeFi?
Yeah, we've done a bunch. Is we've worked on sort of stablecoin projects to get sort of algorithmic stablecoins like happening and working. We've built out completely decentralized asset managers. So I think like a crypto asset manager, but done in a DAO decentralized fashion with the right sort of governance and controls to affect some investment strategy. We've built out some we've built out sort of apps to help onboard a new wave of users and just make trading a little easier and a little simpler. It's I know this is a controversial belief, but I don't think trading shitcoins is necessarily gambling. Like it can be if you're doing it at size and as a full-time job. But it's almost like part of like learning how to. It's learning more about crypto and finance. It's just sort of like you come in, you spend a little bit of money buying and selling shit coins, and then you get a better feel for like market reflexivity, how things sort of like pump and then just like completely fall off. Like some of this stuff is just stuff that you gotta experience. And for better or worse, in the TradFi world, is like this stuff doesn't happen on a 2 or 3 day time scale. But in crypto land, you can basically jump in at any point, and then there's new coins and there's new narratives and new shitters to muck around with. And I think it's more than sort of going and doing a diploma or studying about this stuff in school. There's like if you're going to spend a couple of thousand doing that, spend a couple of $1,000 like trading shitcoins. You'll learn a lot about the messy underbelly of finance and how these things work and how it works at a very fast iteration speed. So we built we're in the process of building and launching something in that space. We built a bunch of stuff to help what do you call it, airdrop farming, more or less, tools to sort of like help in that space and push it along. We've also done things that are sort of like a bit left field. We've tried to build out stuff that was video, like creators allowing to put their videos directly on chain and being, paid for it, in a being paid for it on chain and hosted on chain, and just pushed in that direction. So something that was completely like non-DeFi related. And at the moment we're also working on bringing some semblance of insurance on chain. So a lot.
Yeah. I think people would like that one, mate. A bit of insurance on chain with some protections there. But I fully agree with you. Like I say it as well. Like if you the amount I knew nothing about like really how the money system worked or finance before really digging into crypto. And anyone out there doing an economics degree, finance degree, should really get into the crypto space and follow a few well-known people, and you'll learn a hell of a lot more. Like the amount of smart people out there on economics amazes me as well. And to the shitcoin trading, I do love my fair share of shitcoin trading. Don't get me wrong, but it's all a belief system. It's like if we all gave up on the Australian dollar tomorrow, if we all went, nah, it's worthless. If some big event happened and it was all worthless, no one would want it. No one would want it. It'd be like, I think it's Venezuela, where there's like rubbish bags of money just floating down the street, and it's not even worth picking up because it's lost its value and no one believes in it anymore. And that's where the crypto really helps those people, where you've got that option to escape your system if your country politicians have sort of screwed your monetary policies in the
I think you
running.
nailed it. It really puts you down the rabbit hole of looking with clarity on the fact that a lot of things is just built on like faith and even things that we accept as reality in like the stock exchange, like like stock and flows as a way to value businesses. Is like that is just a meme as well. That's just like that's the way we value businesses because everyone else does it. Like as in there's no strong reason why some business should be valued at like 5x EBITDA and another 10x EBITDA. It's just like it's as much of a meme as anything else. And I think that's it's almost like freeing when you sort of like realize that it's sort of like coming through the other side and realizing that all these things that you thought were real, they are real, but they're no more or less real than Pepe.
Yeah.
And it's almost like realizing that I think is a step on everyone's journey. And in the end, it's basically, value is just, there is no objective definition of value. It's just the market clearing price. And that's the same whether you're talking about like Uniswap, which people lament as a useless governance token, or Goog, which honestly doesn't pay dividends. It's basically the same as Uniswap. It's a useless governance token, but like obviously neither of those are that, and there's value in both. So
yeah, I say it all comes down to supply and demand. Like whether it's stock market, crypto, toilet paper during COVID times. You know what I mean? Like if there's not much, if not many people are selling and a lot of people want to buy, the price gets pushed up. And if the same thing goes around where there's a lot of people trying to sell and not a lot of people wanting to buy, well, the market pushes those prices in the way they want to go. Coming back,
Jeeva, the only thing that I'd add to that is that like yes, 100%. And even for something like toilet paper, like there's things like toilet paper which are like consumed, and Google shares which aren't, right? But even for toilet paper, I don't think there's a component of the price which is supply and demand, and there's a component of price which is really the like net result of this consumption, right? And it's not. And the market will sort of like find a good clearing price for it, and it'll come down. But it's and I do think it's fine to treat the two differently. As in, yep, there's a clear utility, toilet paper gets burnt in crypto parlance. But Goog shares don't, but that doesn't make it like, as in, that doesn't remove, like, as in, it just means that like it's more related to supply and demand as opposed to just, margin on production. And it's really just a matter of like the value that people put on it and the value that they think this entity can generate as it sort of progresses through, and it's really the value that people think, the momentum that this company or entity has or protocol has, which is what the market clearing price is coming at.
Yeah. I wanted to just shift back to where you were talking about working on a few algorithmic stable coins. Now, I know recently a lot of people have sort of got that bad taste in their mouth after Terra Luna happened. But then there's platforms like MakerDAO and the DAI token that have been running for years now. Years, over maybe 5 years, 7 years. Time flies by too fast when you look back and go, oh well, that came out that long ago. What do you think about the algorithmic stable coins compared to like the business model stable coins, where they're just minting and you're hoping that people are on the other side putting these billions of dollars into the business, compared to fully on chain algorithm? There's crypto getting locked, for instance, and then giving you your stable. And MakerDAO is a beast in its own. But the person who thought of that and figured that out so long ago. But what's your opinion on the algorithmic stablecoins compared to the business model Tether stablecoins, mate?
I think in the fullness of time, it's not possible for the algorithmic stablecoin, market cap to be as big as the, actual USD circulating market cap. Is, if that was the case, then the price of the collateral backing it, ETH, would have to, it would just be like astronomical, right? Like, as in, again, maybe that will happen, but like, if we're moving to that kind of world where that is happening, what's more likely is that, like, I think things are going to have to give and adjust along the way. I think one of the things they're going to give and adjust is, and I don't think this kills the algorithmic stablecoins by any measure. It's just that they will have a very specific niche as like, if you assume that the Web3 and the crypto market grows, they'll have a very specific niche that the one-to-one backed, or as much as I'm not a huge fan, CBDC stablecoins will probably grow and fill more. Like, as in, if the crypto market grows sufficiently, like, those will fill more of the role of what USD is currently filling, as opposed to algo stablecoins replacing USD. Also, if we get to these eye-watering market caps or something like ETH, there's a good chance that trade doesn't happen in stablecoins, and people start trading in ETH. ETH is only volatile because we don't trade day to day in it, right? As in, it's volatile compared to USD or AUD, and that's what we trade day to day in. It's not inherently volatile. It's just it's volatile in comparison. So there's a good, and if market caps become that huge, there's a good chance that trade just happens in the what do you call it, the gold standard, Bitcoin and ETHs, as opposed to the stables. But there's also a world where that doesn't happen, and most of the stablecoin market cap looks like a CBDC, right? Like, USDC or USDT is, for every other measure, basically that. Like, as in, it's an on-chain coin. Both can block addresses from transferring it if you own it. Like, as in, it's a CBDC by every market that we care about. It, like, that's what it is. and like DAI less so, like as in yes, they hold a bunch of USDC and all of that could be blocked, but like less likely that that's going to happen. And they hold a bunch of real world assets. So basically holding DAI or SDAI is like getting access to real world yield on chain, which is pretty cool. And I guess like I see like in a world where lots more people use crypto and market caps sort of like skyrocket, I see CBDC sort of, or these kinds of collateral back, real world collateral back coins becoming pretty prevalent, just from the practicality of like, otherwise the market cap of ETH or the collateral backing it would have to be so much larger to do it. However, a lot of these algo stable coins, they usually have a mechanic in which you're more or less like borrowing against it in some fashion, right? Like as in that's like make a day, you put in your ETH, you can mint DAI pretty much, right? At a given collateral ratio. Liquidity, you can put in ETH, you can mint LUSD. And I think these are always going to exist because it mirrors how banks create money, right? Like if you go to the bank to borrow a house, is they don't have to borrow against your house, they don't have like $1 million. They're sort of like using the fact that your asset has value to create debt on the other side of the balance sheet, and that's how this new money comes into circulation. And arguably in America with like lots of banks, this is pretty well market driven. There's creation of new money supply. In Australia with like a handful, there's a lot more government intervention to get there. But these algo stable coins are kind of playing that same role in the crypto space. So for capital markets always tend towards efficiency, and the most efficient way to borrow money in the crypto space is going to be via one of these algo stable coins. Just they don't have to have the USDC or the other side. It's like sort of sitting there in the wings to lend out. They just need the collateral, and they basically can create out of thin air these things that look and feel like dollars, and for all intents and purposes behave the same. So they can unlock liquidity in your ETH without you having to sell it, which is an important part of financial markets. Is an important part of like leverage and growth, and I think that's the role they'll end up playing. So it's a very long answer to your question, but I was hoping to like explore a bit of the nuance around the edges here.
Yeah, that's awesome, man. And with that, there's no busy paperwork that you got to fill out. There's no week or two waits for them to accept you. It's just on chain. Yep, you've got the funds. Yep, you can have that. So much more efficient.
My favorite story here is it's taken me about 2 months to get pre-approved for not even pre-approved, to get an extra redraw facility on my house so I can use it to I guess be a bit more degen. And that's might be longer than what it might take most people. Yep, sure, I'm a business owner. I've got a more complicated sort of. It was Christmas time. Okay, sure. I wasn't like super on the ball, like, replying to every email from the broker instantly and filling out all the information. But, there was work to do, and I did the work slowly. And it took me about like maybe in the best case compressed, it might've been like a week or two. In that same period, I got the opportunity to angel invest into a business. I got the opportunity on Saturday night, 9 p.m. I put my ETH up as collateral, borrowed against it, signed the docs, borrowed LUSD, swapped it into USDC, sent them the USDC. They're a business that was based out in Europe. Got my little angel check in, didn't have to sell my ETH to do it, and was able to unlock liquidity in my ETH to make the trade. Like it's very much democratized this access. Like, to make it very Australian specific. In Australia, most people can only get this kind of liquidity from their houses, and it still takes a lot of work to do so. You can't take it from, if you have like a small bag of Google shares or Apple shares or whatever, you don't get this sort of generalized liquidity on the back of it. You can, not easily and not at great rates. DeFi is sort of the barrier to entry is knowing that you can do it, but once you cross that, it's basically like it cost me what, $100 in gas and a couple of clicks, and an effective interest rate of like 2% when you net it out against the ETH collateral, what it's earning me, and how much I borrowed. It's kind of nuts, dude. Like it's have you seen all these memes where there's like girl math, boy math, plumber math? There's like TikTok reels.
Yeah.
I don't know if this is a thing or not. So if it is, then I apologize for not crediting the creator. But I call this sort of democratizing billionaire math, right? It's like if you're a billionaire or a centimillionaire, you can do this shit, right? Like you don't have to, you can. If
you got no problems. You got the manager on speed dial. So.
You got the manager on speed dial, and also you got the capital to do it, right? Like as in, if you say, for example, I don't want to explicitly list anyone, but like let's just say you have $100 million worth of Atlassian stock, right? You can go to JP Morgan or some large institution, and you could borrow quite easily 50 mil against it at an interest rate which is not going to be like 7 or 8 or 9 or 10%, but like 1 or 2%, because JP Morgan can then also lend out your Atlassian stock to short sellers and make money on it. So they're making money on both sides of this trade. So they're charging you pretty nominal fees to borrow that money, and then you haven't sold your Atlassian shares. You got 50 million liquidity unlocked. You can do whatever you want with that, like a 1% or 2% rate. You can do whatever you want with it. That has not been available to people like you and I until DeFi, right?
Yeah.
Now you can go with your 1 ETH, 3K USD last I checked, or thereabouts, and go to Spark and do exactly this, right? Like it's okay, sure, like you can do a lot more with 50 mil than you can with like borrowing $1,000 off your 3K ETH. But like the fact that it exists at every level of the spectrum, no matter what your ticket size is, and it's available to everyone, like that's the definition of democratized access. It's game changer, and I think this is like the stuff that's flowing downhill. It's what billionaires can do now. The rest of us in well-off individuals in the first world can, and what we in the first world used to be able to do, everyone in the developing and growing world now can. Like that's really what blockchain is sort of it's pushed all of this down.
Yeah, and even with that, that's even like like going into ICO phases or IDO phases, initial DEX offerings. Is that we're at the first time where it's not the rich people being able to buy into the Ubers and then releasing it on the market at 10x the price they bought it for as a bet, and then the stockbrokers, big hedge funds, being able to get in an hour before the market closes to people like me and you, Jeeva, and then dump it because it's doubled the price once they've gone in. It's like in crypto, it's like, hey, it's open. We don't care if you're a billionaire. We don't care if you're in Africa. You've all got the same opportunity to buy at the same price at the same time once the token's open.
Yeah, I love that. Again, controversial sort of view here, where I think more ICOs are better, not worse. It's more people participate early and get exposure to things early, and like yes, there's rug pulls. Yes, there's the potential for people in retail to be to lose out because they haven't done this a lot and they're not sophisticated. But it's also I think unfair that you don't give people with small check sizes the ability and time and space to learn and take some risks, right? And it feels to me unfair that someone like the result of someone taking a bad risk is no one should be able to take this risk, as opposed to a more nuanced approach, which is like, well, educate, let's spend some time, learn about how this is this can be good or bad or dangerous, as opposed to just blanket don't do it.
Yeah.
I've been told that this is a bit too Darwinistic from people I've shared this with, that it's which I can see that, but also at the same time, it's I think I probably have a higher view of most people and their intelligence, as in I think most people are actually pretty good, and it's not a function of like I'm smarter than you because I've done all this finance stuff. It's some of the best traders I know have done none of this stuff. They've just got a great feel for the market, and they just know how to sort of like ride the emotion and exit before they get crashed against the rocks, as it would be, right? Way better than I'd ever do. So it's I think a lot of this is just being exposed and having the ability to practice. So.
Yeah, so that's another thing I wasn't aware about before crypto, the accredited investors, where you've got to have X amount of funds. I know in the US you've got to have X amount of assets, equity before you're even allowed to be looked at to get into those early stages. But yet those people can go spend their whole paycheck on the pokies. They can go take it to the casino. They can go buy lotto tickets, you know what I mean? And that's all okay. They can go put it on the horses, and that's all right. But you can't invest in potential businesses in early stages. But with that, I look at like the crypto blockchain space is compared to those traditional markets. To what we've had is, Bitcoin starting as magic internet money on the internet, to what it is now, where people like me and you and anybody in the world could invest. But all these big investment firms, businesses, were all on the sidelines until the recent ETF. So it's sort of like, I think it's the first market that's reversed in that way, where it was like retail investors were getting in, but the big end of town were sort of on the sidelines, waiting for regulations, or couldn't do it for whatever reasons. What do you think about that, man? That's a bit of like a 180 on traditional markets, eh?
Look, like I think it's awesome, right? I think it's sort of but I'm also careful not to get too excited, because most crypto projects still are still VC funded early, right? As in, they're still, which is basically like, you got to have access, right? And most crypto projects aren't by default doing an ICO, because they're still, and rightfully so, scared of being whacked over the head by whichever regulatory regime that they currently live in. I wouldn't do an ICO if I was going to do a crypto project living in Australia, right? As in, it's just too risky. It's just not worth the not worth the reward. You have to work around it in a different way. It's just the reality of the game, which I think is unfortunate, but on the other hand, like, you're right, like, as in, a lot of retail got into Bitcoin earlier than the institutions. Now the institutions are coming. A lot of retail got into ETH earlier than the institutions. Now we expect the institutions to come this year with an ETH ETF. Like, let's see how that goes. And you can say the same for Aave or similar, right? Like, as in, it's still very early, right? Like, as in, it's most people don't know about it. It's I'd say if I walked into a bar and yelled out Aave, I don't think maybe 1 in 10, if we're lucky, would be able to say, yep, I know what that is. Maybe more like 1 in 20 or 1 in 100. So we're definitely still early, which is great, right? Being early means that you also, with risk comes reward. So it's also a great time to be be exploring and building and involved in this super nascent space.
Yeah, man. Definitely. On that one, is I actually haven't got into this side of the DeFi too much, and I don't know if you have, Jeeva, but the flash loaning, it does interest me, and I do need to dip my toes into it. And people were doing very well, a couple of years ago, and I don't know how it's going now. But could you explain, like, to the people listening, the concept of flash loans? Because that
Yeah,
is an interesting concept.
yeah. Oops, sorry. I guess I describe a flash loan as, and this is technical, but anything that happens in a single transaction, sorry, inside inside ETH is atomic. So it's you know that at the start and end of that transaction that it either worked and then the state moved from one state to the next, or it didn't work, which means that you can, in a single transaction, safely lend someone almost any amount you can imagine, right? Like, as in, you can lend someone $1 billion, $10 billion, $100 billion. It doesn't matter, right? Because that transaction won't complete if by the end of that transaction they don't repay you, right? Which opens up, and one of the things that is a marker of markets in general is opportunities of arbitrage. So if you have two different, for lack of a better way to say it, two different markets, right, for ETH USD, and the price sort of dislocates, and one has a higher ETH price than the other, you would expect the market to rationalize the two by buying ETH of one and selling it to the other until it lines up. Now, in ETH land, sorry, in DeFi land, you can pull out a flash loan, which means that you don't actually have to have the capital at hand to do this arbitrage opportunity. So you can borrow the capital without putting anything up as collateral or otherwise, just based on the security of knowing that the transaction won't be a valid state transition transaction if you do not return the capital at the end of that, that single transaction. So you can borrow $1 million, buy a bunch of ETH in one pool, sell it to the other pool, end up with a bit more money than you started, pay back the $1 million loan, and have some profit. So it's kind of this interesting, and it's interesting because this goes back to my sort of principle of, like, DeFi democratizes. Before, in order to do arbitrage opportunities, firstly you had to be you had to have unfair access, right? As in, you have to be close to the exchanges or close to whatever it is. Kind of still the case, because you need to, like, run an ETH node, or be looking at the mempool, but, like, it's not impossible. Like, as in, there's not the kind of thing that someone technically minded couldn't set up in their garage. It's not in that level of impossibility. But it still need a bit of technical ability to do it. However, you don't need now access to insane amounts of capital to be able to close these arbitrage opportunities, because the market is willing and happy to lend that capital to anyone who wants to do it. So it changes the problem from one of, you have to have good, expensive tech in good locations, the best algorithms, and lots of capital, to, you only really need the best algorithms.
Yeah.
Which is quite a democratization. It's quite an evening of the field. So it's basically let the smartest, cleverest people be able to close the arbs, and that's it.
Yeah. Awesome. Great explanation. Thanks for that one, man.
No
Now,
worries.
coming into, like, identifying challenges and risks in DeFi, what advice would you have for anyone entering the space that is fairly new, to identify any challenges that they may see, along with those risks that are out there?
Yeah, I think if you're new to the space, you're the best thing to do is to go on a bit of a tour. There's a few well-known major protocols. Just have some funds set aside as your like learning funds. And I know this is sort of coming from a point of privilege, but you don't need like hundreds of thousands of dollars. If you can even spare 1,000 or so, like it's almost enough to go and muck around in this space, and really just go and explore. Like as in go and do a swap on Uniswap, go and borrow some money of Aave, go and like honestly, like if you do those two things, you've probably you covered the you've covered the most important sort of primitives. And there's other versions of Aave, there's other versions of Uniswap, sure, but like as in like those are enough. And then from there you can sort of there's different ways to grow and otherwise and learn. And if you're new to the space, I think a big part of learning it is really just like rolling up your sleeves and getting amongst it. And then the only other thing that I'd sort of put out there as probably the principal risk is if you're coming in with sort of like new to the space and you don't really care if you lose those dollars or not because you're coming in learning, it doesn't really matter. But once you decide you want to come in with a bit of size and really use this stuff seriously, you really need a process by which you do not risk your assets. Most people, and this has been drilled in, is like most people think that the way you lose your assets in the crypto or DeFi space is if you lose your private key. Yep. Your private key stolen or someone fishes that away from you, you're definitely not going to make it. And you've given away the castle, as it would be. But you can put yourself at a lot of risk by allowing or approving things that can also just drain everything in your wallet. So when you interact with any smart contract, you are essentially signing a transaction that says, I'm allowing this operation to happen. And both the tooling is getting better, but both the tooling and the reporting, and just as a new person into the space, it's hard to know whether you're signing something that's reasonable or not. And especially if it's a brand new protocol, it's hard to know if you're going to get if you're signing something that's safe, or if you're basically signing your firstborn away. Like it's the like that is the risk. Like it is. As it currently stands, crypto is the Wild West. It is jumping in, to the frontier, and for better or worse, you have to be walking around with your 6-shooter on your hip and be ready to draw and shoot the bandit down. Right? It's not for it is not for everyone. It is not something that is for everyone. But if you really want to explore the frontier, you can do it with low risk. By coming in with a low amount of value. And then the other thing I'd recommend is if you're going to come in with size, just have a very simple strategy for how you manage your wallets. So you can create multiple addresses easily on any wallet software, MetaMask, Rainbow, Ledger, whatever it might be. I always recommend if you're coming in with size. If you're not, doesn't matter, do whatever you want. But if you're coming in with size, have 3 addresses. The first address is you only ever transfer things in or out of, nothing else. And you only ever transfer it in or out to the second address. The second address can interact with random smart contracts, right? The second address can interact with smart contracts that you've interacted with before and is safe. And the third address is your throwaway. So the first time you come to anything, the first time you interact with a smart contract, the first time you're doing something in the crypto space, put a small amount of value in that third wallet, interact with it just to make sure it's all safe. And if all your funds aren't stolen, then happy days. It's a safe wallet and you can interact with it. And the other thing that I'd also just give people, and this sounds like, as in this description sounds like really negative. It's like it's the Wild West. You can be shot at any time. Be careful. Anything. It's over time you build up an intuition, and you build up a good intuition on what is safe, what is not safe, what looks dodgy, what might be okay, and the ecosystem itself has a pretty good self-healing aspect to this. Is if you go to something and you're not sure, there's always a Discord, there's always a Telegram group for whatever protocol you're going. Jump in, ask the question, ask if this is the address of the smart contract. There's going to be heaps of people there ready and happy to help you. And yeah, I think it just it's after a while, it doesn't take very long. After a while of like, hanging out in the Wild West, you get a good feel. You know if you're stumbling into the villain saloon, as it would be, or this is a safe part of town and you're okay, and you can do what you want. But but if I'm gonna like summarize it back down, I'd be like, when you're coming in with size, have a simple wallet management strategy so that you're not putting all your main funds at risk, and you'll be fine. Because the worst that'll happen is that you might get your throwaway wallet might get beaten up a bit, and then like, okay, discard that wallet from now on. Don't use it. Create another one. Now your third wallet is burned. Now you're on to the fourth, right? As in for all your like new smart contracts, testing something out activity. That's my
It's like playing a Wild West game with 3 lives rather than being in real life in the Wild West, isn't it?
Yeah. You have infinite lives as long as you sort of segregate your funds, and segregating your assets is completely in your control. So it's
yeah, it was funny when you were saying like the Wild Western and getting that intuition going. So you see that I was picturing a Western movie, Jeeva, where like there's that canyon where that in the movie scene there's an ambush waiting for you in there. So you got to go around the long way. You don't go through that canyon because you'll have spears or rocks thrown right down at you.
100%, and it's and I think it's also what makes it exciting, as in it's sort of like you're exploring the frontier. It's and I have no doubt that over some time period, 5, 10, 20, 30 years, it'll no longer be the frontier. It'll be nice and safe, and it'll be like walking through your average suburban neighborhood, and nothing. It'll be like like technology generally improves to make sure that these problems are solved. Like as in, and I have no doubt that it will. Right, as in, it's just what we see happen all the time. Is we always underestimate what technology can do over like a long time horizon, and completely overestimate it in the short, or have unreasonable expectations in the short. So it's we look back 10 years, and like you and I will sort of think of the DeFi that we went through as like, what were we thinking, right? But we had a lot of fun, but what were we thinking? And look how easy it is for this new generations. We'll be the guys in our rocking chair, sort of saying the back in my day stories. Then it's which is a good thing. But like if right now you want to come in, it's you just need to. It's super valuable. There's lots to be gained. There's lots to be explored. There's lots of value to be unlocked, and being in the space, but you just have to also be ready to exercise a little bit of caution along the way.
Yeah, and even me now, like I've been in crypto for a while, but I use social proof. I call it social proof here in the office, where I'll actually go to the Twitter profile, and then I see if there's other people that I'm following in the industry that are actually following this account. Under the followers, and then go directly from links from their Twitter to find it. If you come to that, go to their Twitter, and then there's no one following that I know. I stay away. So yeah, that social proof is a good way to sort of safeguard yourself in that instance, as well as Discord and Telegram, but just wait for a couple confirmations on there, because those bots are fast on some of those forms.
course. Wait for a couple of confirmations, and but it's I think that like you've nailed it, like social proof. It's like that's how the industry and that's how the community is like routed around scams. And as a newbie, you just need to know where the safe harbors are and where you can hang out and where you can ask for help. And cool. maybe there's like the last thing they'll add in is I think it's really important, just like, find a friend. If the first time you're doing something, the first time you're sort of like swapping on a DEX, just ask someone to look over your shoulder or screen share and just, make sure you're not like, you're not screwing it up. So it's
and that's the beauty with crypto too, is everyone's willing to help. Like in this industry, there's Facebook groups, you've got Twitter, you've got the Discords, Telegram. You'll find heaps of people that are willing to help and give information. And I always like to go to CoinMarketCap as well. They now list all the contract addresses within there that you can easily copy and interact with those. When I'm normally going to a Uniswap with a new token, gives you that lovely warning message.
And there's ways you can check, and there's ways you can make sure you're not going to get rugged. And I'm kind of anyone who comes and joins now is a pioneer in my books, and is looking for a bit of adventure, and is looking for and you're early. You're sort of you're where others aren't, and that takes a certain kind of person or individual to go not just against the crowd necessarily, but definitely like well ahead, like walk where they're not walking, and see what you can find. And we know the course of human history is like the pioneers are where the fortunes are made. So giddy up.
Yeah, that's it, mate. So Jeeva, where can people come find you, get in contact, come talk to Helix Collective? What are your socials, mate, if you just want to share that with everyone so they know where to find you and your business?
Yeah, sure. So it's on Twitter's probably the best place to hit me up. I am 0x Jeeva on X, I guess, is the correct name for it now. And honestly, same for the business. It's where we are Helix Co _ on X, and we're also on the business is on LinkedIn. So Helix Collective on LinkedIn, and you can reach out to Helix. I'm sure if you Google Helix Collective, we're the first result as well. So it's if you want to reach out to the business, that's the best way. And if you want to chat to me about anything, then hit me up on Twitter, and I'll be more than willing to help and have a yarn.
Awesome. Well, thanks for joining us today, Jeeva. It's been great, mate. And I think the future is bright within the crypto industry, DeFi industry, and the innovative tech that everyone's building and will be building out there.
I think so as well. And it's great to have firms like yourself, Blockstars also pushing the frontier and and seeing what we can do and seeing what we can build.
Awesome, mate. Thank you for joining us, Jeeva.
All right. See you, dude.
Thanks for tuning in. We'll see you next week. Same time, same place.
Subscribe.